Well, an action-packed first quarter coming to a close as stocks eye a second straight quarterly gain despite banking stress and elevated interest rates. Let's take a closer look at some of the best and worst performers, starting with the S&P 500. So as we're looking here, we've got Nvidia, Meta, Tesla, Warner Brothers Discovery. I thought Nvidia was an interesting one. A lot of people looking at it as a real strong AI play, especially. We saw from Stacy Rasgon at Bernstein, he reiterated his outperform rating, raised his price target forecast to $300 from $265. And this really is based on this expected need for these Nvidia chips to train the AI models that are going to be running this generative AI that's clearly in demand at the moment. And we saw that Nvidia CEO Jensen Huang announced a wide-ranging set of partnerships for the products as well. So this really does seem like a long-term play that Nvidia is really capitalizing on.
Yeah, and a few things within the best performers. I mean, you also look at the environment that they're wading through right now, whether that's on still the fundamentals, not really having clear sight going ahead. You don't know when the digital advertising market is going to resume the type of spending that we had seen in 2021 or even 2020 as everybody was spending more time on their devices and everybody wanted to get some of their attention and get some of the dollars that consumers were still willing to spend to whatever extent. So there's the digital advertising market. And even with that, there is still a buoy that companies like Facebook and Google could benefit from because they're typically seen as the two behemoths, the duopoly that's been able to drive that narrative for so long. However, that is getting a little bit more different because of the type of devices that end users have in their hands on a daily basis. You know, all that considered, though, on how we go forward from here, semiconductors, even the rebound there, you could really kind of sum it up in some of the worst performers of last year being some of the early year best performers here in 2023. And if you look at some of the worst performers as of right now, it's the names that should have what is the adage? Beware the Ides of March, right? Banking sector probably could have benefited from that because of the turmoil that we've seen take place there. Some of the biggest decliners there, you're seeing regional banks. First Republic, of course, the most outsized there, and that has been down by about 89%. But much of that move significantly coming, of course, during March, given the fallout and given some of the different stressors that have impacted and the missteps that management has made within some of the regional banks there that have resulted in the injections of cash and capital that they've needed to take on just to stay or try to stay afloat right now, too.
It's true. I mean, and speaking of some of these worst performers in the S&P, you also have in there Dish Network, one of the few pure streaming plays still left in there, really trying to find its place in this market. You have Amazon, Apple, all the others sort of getting into this space. Dish Network still searching for some direction there. And even as we look at some of the best performers in the NASDAQ 100, Nvidia again making another appearance, but also Meta, Tesla, you have CGen as well. A lot of people wondering, what's going to be happening with Tesla? A lot of headlines, so obviously surrounding Elon Musk, but we saw what their production targets look like, and apparently investors do believe that Tesla's actually going to make those.
And so what does this all come back to as well? It still comes back to the Fed, and I know we're going to talk about this more in a second, but it comes back to the policy pathway and the tenor that the Fed has signaled. If they have signaled and given language to the markets that perhaps the worst of the rate hiking is behind us, and now we're getting to more of a stable period where the markets can anticipate what the Fed may do without having to fight the Fed, then you're going to see a continued rally in some of the very names that have really led the way thus far in 2023. Tech stocks, most importantly, because they were some of the most battered as the Fed was initiating the end of their easy money policies as well.
I mean, you have to wonder when it comes to some of these tightening conditions for small businesses, where we're going to start seeing people pulling back. It might show up. I mean, maybe you won't then going for that more expensive car if you have to sort of tighten the purse strings. And, Teslas aren't cheap, that's for sure. So
I have to get a car first, Rachelle. Thank you.
That's all right.
That MTA subway pass works real well.